Question number 25. Now, slightly important question. Just a sec. Yeah, let's start. This is question number 25. Now, there are 4 questions which are slightly similar to each other. We are doing first of them. Okay, read. A multi-product company has the following cost and output data for the last year. Product X, product Y, product Z. Sales mix in value 40%, 35%, 25%. Selling price 20, 25, 30. Variable cost per unit 10, 15, 18. Total fixed cost 1,50,000. Total sales 5 lakh rupees. Okay. The company proposes to replace product Z with product S. Now see, this is sales mix in value. Sales mix in value means what? Whenever you are going to be doing 100 rupees of sales, 100 rupees of sales, value. Out of that, 40 rupees of sales will be for X, 35 will be for Y, 25 will be for Z. Selling price is there, variable cost per unit is there, this is there, this is there. Now company is thinking, let's chuck out Z, let's bring in product S. Estimated cost and output data are. So therefore product X, Y and obviously Z gets replaced with S. Sales mix in value has changed, selling price has changed, variable cost per unit has changed. Total fixed cost, total sales required. Analyze the proposed change and suggest what decision the company should take. What decision the company should take means, should it continue with X, Y, Z or should it now go for X, Y and S? Further, also state the break-even point for the company as a whole in the 2 situations in rupees and in units. So you got to be finding out break-even point for a company in rupees and units. This is our first question, whereby we will try to find out break-even point for a company that has more than one product. If you all think of any question till now, we always were trying to find out break-even point for a particular product. Okay. But now we are trying to find out break-even point for a company which has more than one product. Also state the 4 assumptions in calculation of break-even point. This part is also important for conceptual understanding. Okay, not for exams. Let's start. So, analyze the proposed change and suggest what decision the company should take. What decision the company should take means it should go for X, Y, Z or it should go for X, Y and S. Okay, X, Y and S. So, that's what we are going to be doing right now. So, let's make income statement under XYZ, let's make income statement under XYS and then we'll go for whatever is higher. Ultimately, a company is interested in doing that particular kind of a business which results in a higher profit. So, let's start to be doing that. You all write down please. Income statement under XYZ. So, X, Y, Z total. Now, do one thing, leave one line blank over here and then write down sales less variable cost will fetch you contribution, less fixed cost will get you profit. Now, everybody tells me, look at the question and try to tell me when we are going to be selling XYZ, what will be our total sales here?
5 lakhs.
5 lakhs. You put that particular 5 lakhs in the extreme right hand side column over here, 5 lakhs. Now, in 5 lakhs, how much is the share of X?
2 lakhs.
40%. So, 40% in this particular case will make it 2 lakhs. Then 35% is going to be 1,75,000. 25% is going to be 1,25,000. Now see, this is a total sales of X. Read in the question, tell me how much is the selling price of X beta? 20 rupees. So do one thing. Write down over here number of units. Take 2 lakh rupees, divide by the selling price, that should give you number of units. So 2 lakhs divided by 20, I guess will make it 10,000 units. 10,000 is, every unit will have a variable cost of 10. So therefore my variable cost that will get incurred is 1 lakh. I subtract to fetch out contribution. So contribution is 1 lakh. Further, 1,75,000 divided by 25, 7,000. 7,000 into 15, 1,05,000, 70,000. Then lastly, please pick up your calci. Do 1,25,000 divided by 30. Tell me the exact number it comes. 4166.67. Correct, no? Now that's question mistake. It is coming like that. It should not actually come like that. But then I've got no option then to be taking, because sales is also given to you over there only here. Sales also we all have. Selling price also we all have. You all take that particular thing on calci. Please multiply by 18. 75,000. 50,000. Totals please. 21,166.67, 2,80,000, 2,20,000. Less fixed cost. Tell me how much is fixed cost? 1,50,000. Profit will be 70,000. Obviously, fixed cost will be coming for the entire company here. Okay, so 1,50,000 will fetch you profit 70,000. Now just wait. You got to be doing the things for XYS that you all will take care. That I am aware. But then I am trying to do the next part over here only. Also state the break-even point for the company as a whole in the two situations in rupees and units. Okay. So let's try to be finding out break-even point for the company as a whole. Okay. For the company as a whole in rupees and in units. Okay. Now, first of all, tell me what is the formula of break-even sales? Not break-even point in units, break-even sales. What's the formula of break-even sales? Fixed cost divided by PV ratio. So let's get PV ratio first. Write down PV ratio. Get me PV ratio of the entire company. We are here to find out break-even point for the entire company. So therefore, PV ratio of the entire company will be contribution upon sales into 100. Take your calci. 2,20,000 upon 5 lakhs into 100 is how much? 44%. Correct? Okay. Get me break-even sales now. Break-even sales is fixed cost divided by PV ratio. So do 1,50,000 divided by 44%, no? 340,909.1. Is that okay? Okay. Now this is one thing, we have got break-even point in terms of rupees. But those guys have also told in units also. Tell me what's the formula of break-even point in units? Fixed cost divided by contribution per unit. But one thing, somebody can be saying, sir, you only told us. No, if you have break-even point in rupees, you can always divide by selling price to come across the answer, right? You all can always be doing that particular thing. Sir, why can't we do that? Actually, you can. That I'll tell you all after some time. But at this particular time, the problem is one, that we don't have one product, we have 3 products. Is that okay?
Yes, yes.
So with what to divide here? So a better way is, let's use formula of break-even point and try to be getting directly the answer in the units only. So just wait. So break-even point in units. Break-even point in units is equal to fixed cost divided by contribution per unit. Okay, fixed cost divided by contribution per unit. So in this blank line, you all write down contribution per unit. Now contribution per unit of the entire company, look on the screen please. Beta 2,20,000 is the total contribution. From how many units here? 21,166.67. That will fetch you contribution per unit. So do one thing, write down over here 2,20,000. You write down like this only. I don't think so it comes as an exact figure. 21,166.67 is equal to, if you all want, now you all can write down 2,20,000 divided by 21,166.67 is equal to whatever complete answer comes, no, 10.39. Just put M plus over there. Write down 10.39 dash dash. It is not an exact figure. 10.39 dash dash. Okay. Now, break-even point is equal to fixed cost divided by contribution per unit. Fixed cost is how much? 1,50,000. You all know how to be using M plus in a proper way. So 1,50,000 you are typing on your calci divided by MRC is equal to, answer on the screen should be 14,431.82 units. Please everybody confirm, have you got this answer or not? Beta, this figure you put in M plus, no, 2,20,000 divided by 21,166.67. Press M plus so that it goes inside the memory. Then after that, what to do? You take 1,50,000 divided by MRC. MRC is a better memory recall. Divided by MRC is equal to, you should be able to get 14,431.82. Have you all got that? Okay, now listen. You will be doing same thing under XYS after some time, but my intention now is bit different because I want to be solving next few questions also. So I'll have to tell you that particular thing right away only. Listen. Can we say this 44% is PV ratio of the entire company? Please keep on replying yes or no. Yes or no? Yes, but company is comprising of 3 products XYZ. So this 44% must be related to PV ratio of individual products also for time pass. Let's find out PV ratio of every product also. So you all write it, 1 lakh upon 2 lakhs into 100, 50%. 70,000 upon 1,75,000. Get me the answer? 40%. For Z, 40%. You all got these 3?
Yes.
Now see, what I am trying to be telling you all, this 44% is a PV ratio of the company, but company is comprised of 3 products here, X, Y and Z. It's a common sense thing. If you take average of these, you should be getting 44% only, beta. Company is comprised of the products, no? But average always means weighted average. Okay, not simple average here. Average always means weighted average. So if you take weighted average of these particular 3 products, it should be coming to 44% only. From your birth till today, whenever you have found out weighted average, you have done this only. Sir, I want to be finding out weighted average PV ratio. So therefore, I am making one column over here, PV ratio. These are the PV ratios of XYZ. I want to be finding out weighted average of these. To find out weighted average of these, you got to be having weights here. Now, the moment you all get weights, I guess you all will be knowing what is to be done next. What is to be done next? You take these particular things, multiply by PV ratio, you will be able to get this particular data. And then this upon this will be giving you weighted average. Is that all okay? This is whatever you all have done, no? Weighted average, you find like this only here. Okay. So, just wait. Weighted average PV ratio will be nothing but this data divided by this particular data. Okay. And obviously, this should be coming to 44% only. But there is only one catch now. Beta, for PV ratio, you got to be having weights. You got to be multiplying PV ratio with weights. For finding out weighted average, you require weights. No, yaar. Common sense. Tell me words, that'll be far better. For weights, what data should I take? Common sense. Tell me. Number of units. Okay. Something else?
Sales.
Obviously, sales. Beta, you multiply two things which can be multiplied. PV ratio is 50%. It is 50% of rupee sales, no?
Yes, sir.
It is not 50% of unit sales, no? It is 50%. You always apply PV ratio to rupees figure, no?
Yes, sir.
So, therefore, I am writing over here, weights means sales in rupees. Now, you all will also understand my next statement. Whether you take this data, actual sales, or you take ratio of this, weighted average will always be same, no? We all have done that thing in standard costing also.
Yes.
Okay, so therefore, you tell me, what's the ratio of these yellow figures? It is given to you all in the question. 40 is to 40 is to 35 is to 25. So, I am writing this data as sales mix in rupees. Okay, now you all see it will be coming to 44%. So, 100 over here, 40 into 50 is 2000. 35 into 40 is 1400, 25 into 40 is 1000, total is 4400. So therefore 4400 divided by 100, it is nothing but 44%. So what is to be remembered by you? PV ratio of the company is also weighted average PV ratio of the products. But for finding out weighted average PV ratio, you require weights. Weights will be what here? Speak this entire word properly as loudly as possible. Sales mix in rupees. Okay. Now, I'll give you something in writing, but just wait for a minute. Because you are in that particular mood, I'll ask the other question also. That'll be far better. Now, this 10.39 is nothing but contribution per unit of the company. But obviously, this contribution per unit of the company must be related to contribution per unit of the products also. Let me find out contribution per unit of the product, and it's very simple. Selling price minus variable cost. You all write down contribution per unit of X will be 10. Then Y, 25 minus 15, it will be 10. 30 minus 18, it will be 12. Now, common sense thing, and now you have a better common sense because I did the other particular part also. Listen, can we say this is 10.39? 10.39 is contribution per unit of the company, but company is comprising of 3 products X, Y and Z. If you take their average, it should be coming to 10.39, but average always means weighted average. Okay, so I want to be finding out weighted average contribution per unit. Individual contribution per unit is 10, 10 and 12. Okay, but in case you want to be finding out weighted average, then you require weights here. Now, tell me beforehand only, it will be far better. Now your common sense is there. This is contribution per unit. In case you want to be finding out weighted average, you require weights also, yaar. Now you will tell me what should I take as weights. Please give some proper answer. Number of units? No. Contribution per unit can only be multiplied by number of units, no?
Yes, sir.
So therefore, in this particular case, I am going to be writing sales mix. Speak further in units. First we were taking sales mix in rupees because that was a PV ratio. Now it is sales mix in units. Okay. So therefore sales mix in units. Do you have unit data? Yes sir, I have the units data over here. I will take these particular figures only because they are not exact figures. I'll take like that only. So 10,000, this is 7,000, this is 4166.67. And if you have good amount of common sense, you all will understand, sir, every number is there with us only. This particular figure is 1 lakh, this particular figure is 70,000, this particular number is 50,000, no?
Yes, sir.
Beta, number of units into contribution per unit will give you your total contribution. So therefore this particular figure is 2,20,000. So weighted average contribution per unit is equal to 2,20,000 divided by 21,166.67. That is nothing but in this case 10.39. My job is altogether done. Okay, and I'm just concluding on two lines. PV ratio of the company also represents weighted average PV ratio of the products, but the weights that will be taken over here will be sales mix in rupees. Last thing, contribution per unit of the company also represents weighted average contribution of the products, taking weights as speak sales mix in units. Okay, so you are writing these particular lines. This is for your reference, not part of the answer. Okay, so write down over here just for understanding. Just for understanding, not part of the answer. And you write down whatever I am saying first. Write down PV ratio of the company also represents PV ratio of the company also represents weighted average PV ratio of the products. Taking weights as sales mix in rupees. Leave 10 lines, you will be copying this in a minute's time, but you write down the other line also. After leaving 10 lines, you write down whatever I am saying now.
Sir, can you repeat the
Weighted average PV ratio of the company also represents weighted average PV ratio of the products, taking weights as sales mix in rupees. Okay, leave 10 lines and write down this particular statement now that I am saying. Contribution per unit of the company also represents weighted average contribution per unit of the three products taking weights as
Sir, can you repeat?
Beta, it is the same thing that I have told before, just PV ratio word will get replaced by contribution per unit. Okay. Contribution per unit of the company also represents weighted average contribution per unit of the three products, taking weights as sales mix in units. In those 10 lines that you have left, please copy down this, and then after the second note, please copy down this. Okay, listen. This thing is all done. Okay. Now, one thing that I have finished, XYZ. you're going to be doing exactly only this particular table for XYS also. Okay. Over there, every number has changed. Be careful. Okay. You all can write down income statement under X, Y and S. X, Y and S. Start. Done, beta? 51,500 will be the profit, if I do remember. Just a sec. 51,500 is a profit. Then 1,60,000 divided by 47%. It is 340,425.5. Correct?
Yes, sir.
Okay, and 15,000, how much beta? That I am not sure. 15,000? 0? Point something, correct? No? That's okay. Done? I'll proceed, beta. Complete. Sorry?
In exams also, sir, we have to do that individual weighted average.
No. So you got the answer without the weighted average. In any case, you did not do this to be getting these answers, right? I've given no, just for your understanding. We completed the sum before doing this particular thing, na beta.
Sir, what is the answer of profit?
Profit is 51,500. 211,500 will be the contribution. 1,60,000 is the fixed cost. 51,500 will be the profit, if I remember. Those people who have not finished, please finish. So everybody is done, sure?
Yes, sir.
Okay. Now listen. One last thing over here. Also state the 4 assumptions in calculation of break-even point. Listen. Tell me, when this chapter started, there were 3 assumptions to this entire chapter. What were those 3 assumptions? Selling price is constant. Second, variable cost per unit is constant. Third, fixed cost is constant. Now, I can try to tell you these assumptions in slightly a different way also. How? See, your formula of break-even point is fixed cost divided by contribution per unit. Contribution per unit is selling price minus variable cost. So try to be thinking, if I am ever saying that this is the break-even point of my company, but this break-even point will remain as break-even point till the time 3 things remain same. Which 3 things? This and this. It's common sense, no? If any of these things will change, your break-even point will start to be showing changes, no?
Yes.
Okay, so your regular break-even point is always under 3 assumptions. Which 3 assumptions? That selling price is constant, VC per unit is constant, fixed cost is constant. Okay, but just now you computed break-even point for this entire company. I can explain either through break-even point in units or in rupees. Answer will be same only. Let me explain through units. Now this is break-even point of the entire company. So break even point of the entire company we all calculated as fixed cost upon contribution per unit. Okay. But contribution per unit that we all took was obviously weighted average contribution per unit. Correct, no? Correct, no?
Yes.
Because there was more than one product. Try to be thinking, when will this break even point, that is 14,431.82, will remain as break even point? When will this break even point remain as break even point? Can we say till the time first fixed cost is constant? Is that okay?
Yes.
Second, till the time this particular figure will remain constant. Now this particular figure was nothing but weighted average of the three products here. So can we say this 10.39 was weighted average of these particular three figures? 10.39 will remain as 10.39 till the time, can we say individual contributions per unit will remain same?
Yes.
But if individually things will change, even the weighted average will change now, yaar. So therefore, I will be assuming that this and this will remain constant. Can we say for us to be assuming this and this will remain constant, I can assume that selling price of each and every product will remain constant and variable cost per unit of each and every product will remain constant. Is that okay?
Yes, sir.
Okay. But this is not over. Why? So my second assumption, see if 10.39 has to remain as 10.39, we will have to be assuming selling price of each and every product remains constant, variable cost per unit of each and every product remains constant. But still, even if 10, 10 and 12 remain constant, 10.39 will remain constant when one more assumption is true. Can somebody now tell me which is that other assumption that we have never ever spoken? Sales mix should remain constant. That is, sales should remain in this particular ratio only. You all will understand if tomorrow I change the ratio of sales, means weights will change. Even the weighted average will change, no? Are you all understand this? So therefore, in this particular case, last assumption over here is that sales mix is also constant. Okay. Now tell me why this assumption I never ever told you before this ever? Because there was only one product. Beta, if there is only one product, then in that particular case, it doesn't matter, no? Because there is no question of mix. But if there is if there is more than one product, this assumption will also start to come into existence. Is that all okay?
Yes.
Okay. You all write down 4 assumptions. In your notebook, you all write down 4 assumptions of break-even point. And never write down short form for assumptions. It becomes too pathetic. They will tear off your bloody paper only. So write down the complete word. No matter how lazy you are. Write down. First. Fixed cost of the company remains constant. Second. Selling price of each and every product remains constant. Third, variable cost of each and every product remains constant. Fourth, sales mix of the company remains constant. That is, now here also I am giving you all 2 options. Sales mix of the company remains constant. That is, now see over here. Can you say sales mix, if it is expressed in value, it will mean that sales mix should remain 40:35:25. Is that all okay?
Yes.
Or if you say in terms of units, then it should be in the ratio of 10:7:4.167. Is that all okay?
Yes, sir.
Okay, so just a sec. Point number 4 is sales mix is constant, correct? No? Of the company remains constant, that is in rupees should remain in the ratio of should remain in the ratio of 40:35:25 or in units should remain in the ratio of 10:7:4.166. For XYZ, I've stated the assumptions in reference to X, Y, and Z, not in terms of X, Y, S. That's okay. Is it written?
Yes, sir.
Okay. Now, just one thing, one last thing. Analyze the proposed change and suggest what decision the company should make. Over here, profit was 70,000. Over here, profit was 51,500. So, this option is better. You write down that particular thing as a last thing. Write down. Company should take that decision where its profit is higher. Full stop. XYZ is a better option. Okay, this is all done. Now what I have written the shorts over here, try to be seeing that. I've written a lot of things over here. In end, those options are better. In end, those options are better where there is more profit. So XYZ was a better option. PV ratio of the company is also weighted average PV ratio of the three products, taking weights as sales mix in rupees. Contribution per unit of the company is also weighted average contribution per unit of the three products, taking weights as sales mix in units. Remember, last assumption, sales mix remains constant because that was a new thing. For under XYZ in the entire problem, sales in rupees will also be in the ratio, will always be in the ratio of 40:35:25, and in units will always be in this particular ratio. So almost the same things that you all have written also, but I wanted you all to write one, so therefore you all keep that particular thing in mind. Okay, this particular question is done. Question number 26 no is almost similar to your current question. I have left that thing for homework, so leave two sides. Question number 27, you all will start and finish. I am not even trying to be reading it. I have made the format on the screen. That should be more than enough. Okay, you all read question number 27 by yourself and finish off this entire thing. Only this much and nothing else. I'm giving you all 4 minutes, finish. 27. 26 is for homework, 27. I have written some answers, just verify once you finish. Done. Now, 28 and 29 again slightly connected, but our work is very less in all these questions. Okay, very less. Listen, question number 28. A and B give contribution of 2 and 3 respectively. Okay, I think it must be contribution per unit only here. Fixed cost is 10,000. Find break-even point assuming sales mix to be 3:8 in units. Now, we just have to be finding out break-even point. Now, break-even point is, sir, should we find out break-even point in rupees or in units? Now, you all do one thing. Read this two-liner question once more and tell me, you will be able to get me the answer in rupees, units, or sir, whatever you will say, we will do it, sir. Units, because I think for finding out break-even point in rupees, no, you don't have PV ratio, neither you have the selling prices. Did you all understand this?
Yes, sir.
So that thing is not possible only. So we can only find out break-even point in units over here. Okay. So break-even point in units, it's formalized. You all are not writing. Don't write. So break-even point in units are formalized fixed cost divided by contribution per unit. But beta, if there is more than one product, can we say contribution per unit starts to get replaced by weighted average contribution per unit?
Yes, sir.
Correct, no? Tell me, how much is fixed cost?
10,000.
10,000. Can we say now weighted average contribution per unit? We'll have to find out. You all write down now. Write down. Calculation of weighted average contribution per unit. Now, tell me one thing, just one thing. Whenever you are trying to be finding out weighted average contribution per unit, your weights will be what? Sales mix in units. So, write down over here products, weights. Weights will be sales mix in units, then contribution per unit, and then total. So you have two products over here, A and B. Three, 8, 11. Then contribution per unit 2 and 3. So multiply please, 6, 24, 30. So weighted average contribution per unit is equal to 30 upon 11. I'll leave it off like that only. Get me this answer. Now, question number 28 I have finished. Question number 29 I don't wish to be reading. It is not exactly same as this. But if you all will read, you all will understand that particular thing. In case you want help, then you can read this point number 1. This is applicable to this question. You can read point number 2, that is applicable to this question. But you all make the format, you all try to be finishing. 1.5 line question only here. Please start. In fair directly, in exams, nobody is going to be giving you all the format and trying to fit in the numbers. Please think yourself what is to be done. Should be quite easy now. Yep. Done. Obviously, your format or your other thing should have been in this particular manner. In that question, you can only get me break-even sales. So, break-even sales is fixed cost divided by weighted average PV ratio. So, fixed cost in this case is 20,000 divided by PV ratio. So, PV ratio we'll have to find out. There is more than one product, right? So, if there is more than one product, you should try to substitute PV ratio by weighted average PV ratio. And for weighted average PV ratio, we require weights. Weights will be sales mix in rupees. So, this is PV ratio. Okay. Individual PV ratio is how much? 30-40. 30-40. This is 2:3, 5. Multiply. This is 60. This is 120. This is 180. weighted average PV ratio is equal to 180 divided by 5 is equal to 36%, 55,555.56. Has everybody got this by themselves?
Yes, sir.
Okay, my job is altogether done with this. Okay. Question number 20. And they are just cute little questions, nothing much in all these questions here. Now, might be the last two questions that we all are doing, not very tough ones. Listen. Question number 29. Question number 30, sorry. MK Limited manufactures and sells a single product X. I'm going to be doing both these questions. Whose selling price is 40 per unit and variable cost is 16 per unit. I get it. Selling price is 40, variable cost per unit is 16. Part first, if fixed cost for this year are 4,80,000 and annual sales are at 60% of margin of safety. Annual sales are at 60% margin of safety. Okay. Calculate the rate of net return on sales assuming income tax level of 40%. Let's do part first, then we'll come back to part 2. Now, just do one thing for me. Tell me, if I give you only this much amount of data from here till here, tell me what you can compute for me if I'll give you only this much amount of data. You will be able to find out break-even point. Okay. Now, let me get break-even point, say in terms of, in this case, say units. Okay. So, let me start by doing that particular thing. Write down please. Part first. Break-even point is equal to fixed cost divided by contribution per unit. 4,80,000 divided by contribution per unit will be 40 minus 16. So 4,80,000 divided by 24. Tell me the answer please. 20,000 units. Now see, what those guys are saying, annual sales are at 60% margin of safety, means out of total sales, no, 60% is margin of safety. Can we say sales actually has two parts, beta? First part of sales is called as break-even sales. Second part of sales is called as margin of safety. Can we say if margin of safety is 60% of sales, break-even point will be 40% of sales, no?
Yes.
Okay, so let's present that in a chart manner. It will be easier for you all. Sales has two parts: break-even sales, margin of safety. Take some colored pen. If this is 100, so margin of safety is 60. So this particular figure will be 40. Now, I have this particular data in terms of units beta. So that's okay. Then I'll get everything in terms of units. Get me the other figures. Sales will be 50,000 units. And this will be 30,000 units. Now see. Those guys have told you what? Calculate the net rate of return on sales assuming income tax level of 40%. Now just wait a sec. Please don't write. Listen. What you all will do? You have to find out net rate of return on sales. Net return means profit. Profit will usually be measured after paying taxes. Yeah, taxes will go to the government. So what you all can try to be doing? Listen. Find out sales, that is number of units into selling price. You have both the things. less variable cost. It will be number of units. Obviously, number of units is going to be to 50,000 into variable cost per unit. You have it. Sales minus variable cost will fetch you contribution. Less fixed cost. I guess fixed cost also you all have. Will start to give you profit. But let me call this particular profit as profit before tax because there are taxes in the question. So less tax. This will give you PAT. Once you get this particular PAT now, what sum wants is, it wants net, I'll write down the exact words, net return on sales. So net return on sales will obviously be nothing but this figure divided by this figure into 100. So that calculation you show over here, and then in this case you try to be getting the answer. Will this be done by you all?
Yes.
Finish. I have got no idea. I'll just take it up. So 50,000 into 40 now. This is 8 lakhs or what?
Yes, sir.
%21.6%.
Yes.
Okay, listen. Mainly doing this question for part 2 of the question. For the next year, it is proposed to add another product line Y, whose selling price will be 50 and variable cost will be 10. Okay. The total fixed costs are estimated to be 6,66,600. The sales mix of X and Y will be 7:3. Okay. Sales mix of X and Y will, whenever they will say sales mix na, by default you try to be thinking it is in units only. In case you want to be writing somewhere, you can be writing. Just put an asterisk over here. By default, whenever sales mix word come, no, we assume that it is in units only. Assumed in units. Okay. Determine at what level of sales next year would MK break even. Okay. Compute separately for both X and Y and break even sales in rupees and quantity. This part I will do. But before this, whatever is there no is exactly same as this question that you all had done. Question number 28. You read yourself and you finish it off. I will do copy paste towards the end and I'll change up the numbers. You will write on part 2. Everything is there. Whatever is not there, you will be able to compute that quite orally. You get it? You tell me your answer, please. I will just check. Just give me some time. Just cross check whatever numbers I am writing, they are okay or not, because I myself am not very sure. It comes exact, no? 23,135. One sec, it is 6 lakh. There are 4 sixes or 3 sixes? 4 sixes. Two, 3, 23,145.83 units. Correct, no?
Yes.
Okay, okay. Please, everybody reach till here. You tell me you have reached, and I'll continue further. Now, see. Now, just one last line, and this is easy. Don't mess it up, please. It's quite easy. Give separately for X and Y and break even sales in rupees and units. See. Can we say this is break even point for the company as a whole, no? Yes. For the company as a whole. Can we say whenever sales will happen in units, it will happen in the ratio of 7:3. Is that okay?
Yes.
So if somebody will ask us the breakup, no, this is units beta. So take your units ratio. You all write down. Divide this only into 2 parts. Write down sales mix in units 7:3. So therefore, this break even point we divide it, no, in the ratio of 7:3. 16202.08. I am not very sure of the numbers that I am writing. Please check. My calci has become a Chinese calci now. It shows any answer. Obviously, this entire data is in units only. Now, but those guys want in terms of rupees also. See, those guys have told. And the break even sales in rupees and quantity. In quantity, we all have got now. Can we say this is a break even point of each and every product in terms of units? If I have to reach till break even sales, with what should I multiply, boss? This I'll multiply by quantity sold. This is quantity only. You will multiply by selling price, no? Beta, quantity you will multiply by quantity, it will become quantity square. Okay. So multiply by selling price. Selling price 40 and 50. Please multiply. This is break even sales in rupees. Take this answer, add it. This will give you break even sales of the company also in rupees, obviously. Just a second. Total is, I'm not sure, 995,270 or something?
Yes.
Okay. Two 7 1, I'll write it. Okay. In case you want to round off, or in decimals also, that's okay. Job done. Okay, listen. I'll not do the next question. I'll leave you a bit early. Just one thing about that particular question. Listen. Now, I am working over here. Okay. This is my organization. I work over here. Now, I try to be thinking, many times I try to be thinking like, that instead of working as a lecturer in in a coaching institute like mine, I could have worked at IIMs also. So some lectures I have taken over there as a guest lecturer. So those guys had offered me also to take lectures over there on a constant basis, but I didn't want to be doing that. Now today I am doing this full time. Now I could have done this also. I would have got money over there. Now many times I tried to be thinking, if I was not doing this, no, I could be playing sports also. I was pretty good at that. That is what I think. So when I was 15 years, I was selected for the national team of table tennis, but I did not pursue that. For the reasons which are known to me, that time it was not considered to be a career. So table tennis was not a career at that time. Apart from this, I've tried some other things. I've done theatres for 3 years, open theatres. Obviously not a name making thing, but very satisfying thing. Now, all these things that I'm telling you are all correct things, no fakam faki or something. Okay. Apart from that, my last thing that I did when I was doing my CA, I was also trying to specialize in Java. That is one of the languages that is used for most of the software codes that are written. So, I could have pursued my softwares also. So, these are, say, the avenues that I have today also. Now, listen. Now, whatever after this I am writing are all random numbers. Okay, say that this gives me a net profit of, so any number I am writing, say 30 lakh rupees per year. This will give me say 40 lakh rupees per year. If I would have practiced my software engineering skills, I would have got say 25 lakh rupees a year. In sports, bad thing in India, you don't get money. So I would have got say 5 lakh rupees in per year. And theaters is a least rewarding thing. Okay, because most of people like movies, they don't appreciate the theater artists. I would have got say 3 lakh rupees a year. Okay. Now listen to me very carefully my question. Now currently I am doing this. Tell me only financially, so only financially. I am not trying to talk of whatever is, wherever is my heart. So only financially. Tell me if I was not doing this financially, what I would have done? IIMs. So can we say if I am taking lectures over here, I am losing 40 lakh rupees, no? Or I am losing total of these particular things I am asking? 40 lakhs, no? I would have done only one of these particular 5 things here. So therefore, if I am over here, I am losing the opportunity of earning 40 lakhs. So therefore, for AG Next, my opportunity cost becomes how much? 40 lakhs. You all understood this? Okay, now next 4 answers will be quite simple, reply them fast. If I was pursuing my IIMs, okay, then in that case I'll be getting 40 lakhs. But if I'm getting 40 lakhs, I will be losing 30 lakhs. Now next 3 answers will be same only. If I would have pursued this, tell me how much I would have lost? 40 lakhs. How much I would have lost? 40 lakhs. How much I would have lost? 40 lakhs. Okay. You always take higher, because if I would not have done this, I would have done something else. If I have many choices, I would have done whatever gives me the highest returns, no? Opportunity cost is the opportunity that you have lost. If you were not doing this, you would have done something else. That something else would have given you more amount of money. I would have selected that particular option. Okay. I'll see you all in the next lecture. Bye guys. Take care.